So don't take this the wrong way. I think mining is not a good way to get into Bitcoin. The Bitcoin mining market is the most competitive, most cutthroat, difficult market to survive in. You have to be an excellent operator to survive in that market. I believe this back when I didn't know about Bitcoin and I was just interested in gold as an asset. I would tell people, look, if you're interested in gold, you're bullish on gold, buy gold. Don't buy miners, because when you buy a miner, you're not getting direct exposure to the commodity. You're getting management risk, you're getting geopolitical risk, you're getting execution risk, you're getting all these other things which aren't direct bets on the commodity itself. If you want and you believe in Bitcoin, buy Bitcoin.
Welcome to the show, everybody. This is the Reinventing Energy and Money show from Abundant Minds. In this episode, we're excited to have Vijay Boyapati. Vijay is the author of The Bullish Case for Bitcoin, which is a seminal book in our space. It's got a special foreword from Michael Saylor, as well as raving reviews from Jack Dorsey, who are two of my personal heroes in the Bitcoin space. Vijay himself graduated from the Australian National University with degrees in science, mathematics, and computer science, and has worked as a software engineer at various companies for more than a decade. Vijay is currently a passionate educator in the Bitcoin space, and I absolutely admire him for giving his energy to make the world a better place through the adoption of better money. Thank you for being with us, Vijay. Welcome to the show.
Thanks for having me, Beau, and for the kind introduction.
Vijay, we are embarking on a journey together in about a week where we get to talk about Bitcoin in front of people in Portland, Oregon for the conference Bitcoin is for Everyone. In the first talk in that conference, we are introducing what people are going to talk about for the rest of the day. And we're trying to answer the question, who is Bitcoin for? So I'd love to start off our podcast today answering the question, who is Bitcoin for?
I mean, the title of the conference is perfectly apt. Bitcoin is for everyone because Bitcoin is a new form of money, and it's the best form of money that humans have ever seen. And money is, in any civilized society, it is half of every transaction. It's the foundation on which we build all trade and savings. So replacing the current system that we have, the current monetary system, with a much better system, a much fairer system, a system which is politically neutral and which isn't controlled by any particular country, I think is going to benefit the whole world. And in my book, Charles de Gaulle talks about in the 1960s the exorbitant privilege that the United States had won itself by building the world monetary order on top of the dollar. And he aspired for a world in which the world economy was built on a non-political form of money. And he thought that that would happen. He thought it would be gold. Unfortunately, gold has some problems with it. The Bitcoin has really fixed. And so I think we're going to get back to that kind of hard money standard that we saw in the 19th century, and which really helped bring the world out of poverty. It was the period of time which saw the greatest growth in the standard of living of the average person. From the 18th century to the end of the 19th century, had tremendous economic growth, and hundreds of millions of people brought out of poverty because of globalization that was built on a fair monetary standard. And that's what I think we're going to get back to with Bitcoin.
So would you say that the time we're living in right now, you could draw a parallel to previous times in history where we have been on a sound monetary standard, or the closest analog that we could get to a sound monetary standard? Is that kind of what we're living through today?
Well, we live on a fiat money standard today. We live in a world which is built on top of dollars, which is a political money, a money that's controlled by the US government. And the US government really uses the dollar as a tool. It uses it as a tool against countries that it's not necessarily very friendly with. And you can say that that's good or bad, but even nations that are friendly with the United States don't like the fact that the US can export its inflation to the rest of the world. I think it's really going to benefit us all to have a money which isn't controlled by any particular government, which is built on a bunch of rules that everyone can see and audit and understand. and also which gives us, for the first time ever, the ability to save in something that can't be debased. That's never been possible before in human history, and I think that's one of the things I'm most excited about under a Bitcoin standard.
What do you think it is, or what do you think the quality of Bitcoin is that draws most people in, or what drew you in to the Bitcoin space in terms of how it was designed and what appealed to you?
So I have a background in Austrian economics, and when I first came across Bitcoin, I think the thing that fascinated me most was that this was a new form of money that had a price level, and its market capitalization was increasing. And this defied all understanding that economists have, that you could create a new money out of thin air and that it could have value. Most economists, if you told them this prior to Bitcoin, would have said that's not really possible. Maybe it would get a few users, but it would only sort of survive within a very niche circle. It could never grow to the size that Bitcoin has grown to. So I was fascinated by Bitcoin just from the economic perspective. Like, why does this have a price level at all? Let alone why is this price level been steadily increasing for over a decade now? So that's where my particular excitement for Bitcoin came from.
Well, I'm just curious what the aspect of Bitcoin that drew you in was. If it was like the fixed supply, if it was the difficulty adjustment, if it's the whole system of kind of complex adaptive feedback loops that makes it such a beautiful design. Like, what was it that stuck out to you that got you over the line that made you say, I'm gonna devote a lot of time to this.
Yeah, I think it was the fixed supply for sure. A combination of the fixed supply and the fact that it had this attribute that made it like when I saw Bitcoin, I first began to understand. I was like, oh, this is like gold. This is much, has a lot of the attributes that make gold valuable, made gold valuable for all of human history. Except it's like gold with teleportation built in, and that's something I found absolutely fascinating. It's that you have this new hard asset that you can transfer as easily as sending an email, and I think that combination really, that was something that excited me more than anything because just to tell a brief story, when I was a kid, my mum got sick and my dad was worried about raising two kids by himself in Australia where my sister and I were born, and he wanted to move back to India where he had family. And so he sold all of his assets, and India didn't have a banking system at the time. So to transfer his assets to Australia, he sold all of his assets and bought gold, physical gold. And I remember him traveling on the plane to Australia with a bag of gold, being absolutely terrified. He tied the bag to his leg so no one could snatch the bag. And I just remember his anxiety that whole time. We got to India, and you have to go through customs in India, where there's just the customs agents are incredibly corrupt. So it's a really scary process to take any valuable asset through customs in India. But he finally managed to get the value there and sell the gold, and then use it to buy assets in India like real estate. But this primed me for understanding Bitcoin. When I first started to understand it, I was like, wow, this is something that my dad could have traveled to India without having to go through this stress. He could have just transferred value to the other country, like by sending an email, or he wouldn't even need to transfer it. He could just walk across a border or fly across a border and have the value with him by controlling his private keys. So to me, this felt like gold on steroids, and that's really, I think, that the light that went off in my head, like this is going to be a big deal.
I think we share that backstory, not in that kind of vivid detail where we were trying to move countries and take our wealth with us. But I grew up in a family where the only thing that my grandparents trusted and the only thing that my parents trusted as a way to store your energy through time was gold, and that was much of the early framework that I used. That was essentially my on ramp to understanding Bitcoin. Was I had already built the same kind of mental framework around trying to understand that shiny
Were
gold
they
rock.
from Europe, Beau?
My grandparents they immigrate or their parents immigrated from London, I believe.
I see.
So they were fleeing the British Empire. I don't know if they had a story to tell about making sure that they could store their wealth, or if it was just getting out of that situation. But my grandparents were very very serious about storing your energy and storing your wealth in something that can't be debased. And that only became clear to me as something that was important after the great financial crisis in '08. And it still, even after that event, took years for me to understand what had happened in the past and why it was so important. And in many ways, it was a decade before I took the time to understand that Bitcoin was the solution to that event. Did you have any kind of personal impact from the financial crisis that kind of turned a light bulb on for you?
I you know the financial crisis. I think by that stage I had already had been investing for several years, and I had had a background in Austrian economics. I actually predicted the financial crisis was going to happen. I was shorting banks, and made a couple of pretty profitable trades when that happened. So that for me that was something that I expected given the excesses of the housing boom in 2005 2006. So yeah, I think it was a good lesson that the system that we live under is much more fragile than people believe it is.
Do you think, I think gold holds a personal significance to both of us. Do you think that comparing Bitcoin to gold is a useful analogy for most people? And if not, how else would you maybe liken Bitcoin for someone who's just trying to learn about it?
Yeah, I actually think it's a great analogy. I think it's a perfect analogy, in fact. And I know that there's some criticism that Bitcoin is completely new. It's programmable, and it's a technology, and it's a protocol, and it's all these different things. But really, ultimately, the way we use it is as a form of money. And as a form of money, it's a very, very close cousin to gold. It just it fixes some of the attributes that were problematic with gold. So, for instance, it's difficult to assay gold. So you get a gold coin. It's not necessarily clear that it's a real gold coin, and this is a real problem in the gold market. There's a lot of fake gold plating wrapped around tungsten. It's difficult to secure gold. If you have, let's say, you have $1 million worth of gold, it's kind of scary to secure it yourself, like keep it under the mattress or however you want to do it. This is why
And good
gold.
luck transporting it.
Yeah, transporting is scary. Like my dad flying on a plane with a bag of gold. And this is why gold became so centralized. This is why it became so easy for governments to confiscate gold because most people did not want to self custody their gold. So it ended up with a few financial institutions. And then when Franklin Roosevelt issued Executive Order 6102, it was very easy for the US federal government to go to the banks and say, we're taking all the gold and grab most of it. And of course, just it's expensive to transport gold and it's slow. Imagine if you wanted to send me gold from Portland up to here. It's going to take a while. You're going to have to insure it. It's going to be scary sending it in the mail. So this transportability is one of the attributes that make for a good form of money, and Bitcoin is so much superior, like 100x superior to gold along that attribute. um, but in general, I think Bitcoin is really closely related to gold, and we can look at what happened and how gold was used in the 19th century and use that as a model for how I think a world under a Bitcoin standard would look. I think there are a lot of people who say, no, everything will be completely different. We don't need to look to the past at all. And I'll give you one example of this. I think there would be banking in a Bitcoin world. And I know I'm not the first to say this. I'm not taking credit for this idea. It was actually Hal Finney who was the first person to talk about this. And he said, there would be banks in a Bitcoin world, and Bitcoin would serve as this kind of monetary base or high powered money. And then there would be a banking system built on top, just like there was under a gold standard. So we can learn a lot by looking at the gold standard and learn a lot about the benefits that a gold standard brought the world in the 19th century.
Can you talk more about, just because I'm not a history buff for the early 19th and even late 18th centuries where gold standards were more common. Can you talk about some of the impacts that you've read about? Because I don't think that you were there personally, but ways in which a gold standard was impacting society of the day, and maybe contrast it to the world that we've lived in for most of the 20th century now under fiat standard.
I think one of the big things is it creates this fundamental incentive shift in a society that people want to save. Because when you saved in gold, you could feel confident that the value of that gold would you'd be able to keep it through time. And so when people want to save, that tends to increase the pool of savings. And when you increase the pool of savings, then you're able to invest more, and you're able to invest in projects that will help the growth of society, and will bring the living standard up for everyone. We live in a system today where, because of the debasement of money, you are encouraged to consume very quickly, because if you don't consume, the value of your money depreciates over time and things get more expensive. So there is this shift where there's less of a desire. You don't want to keep money in the bank. Most people don't keep savings in money. So you have this twin effect. One is you don't want to keep savings in money, so you look to invest. You look to go out on the risk curve and find investments so that you can keep up with inflation. And this creates a tendency to gamble. And this is why we live in the GameStop era, where people are just looking for things to bet on, so that their money doesn't lose 20 or 30% of its value just over a couple of years, as it has in the last few years. And it also encourages you to spend and consume. So the mindset of the population at large changes pretty significantly. And this is why I think the 19th century was, the greatest expansion, relatively speaking, of human wealth. Is there was a huge incentive to save and invest prudently, and so you had a lot of projects which built the wealth for all of humanity. And yet it was much less consumerist in the 19th century than it is today.
Would you say, we talked about the portability being something that Bitcoin improves upon gold 100x or even 1000x, just in terms of, how you can take it anywhere. But even in the scarcity aspect, we think of gold as being something with a limited supply, but even the above ground supply of gold has something like doubled in the last 50 years, as I understand it. It's still got about a 2% supply inflation. So even the best money at the time that our grandparents and further back were saving in this, it was still a leaky energy storage vehicle. So maybe you can talk a little bit about how profound it is that there's 0% inflation and that it is truly a closed system in which all the energy that goes into it is conserved.
Yeah, this is the first time in history that we've had an asset which provides ultimate scarcity. We've never had anything like this. I think it's not like a huge distinction from gold. It's just an improvement on gold. Gold, as you say, has 2% inflation. The good thing about gold is that inflation is not political inflation. The
Mm.
problem with the fiat system is inflation is entirely political, and it serves the needs of politicians. So I just think it's something it's an improvement on gold. It's not necessarily a completely new thing.
What would you say if you were trying to describe Bitcoin to someone who's new into the space? What do you think the most common misunderstandings that people have around this are?
I think probably that, well, firstly, that this is a scam. Like, this is money that's been created out of thin air. It's not backed by anything. It's not backed by an asset. It's not issued by a government. So I think the biggest misconception is not really so much a misconception, but a misunderstanding, that something like this shouldn't have any value. So the fact that it has value is somehow a scam or a Ponzi scheme or a pyramid scheme or something like that. And I think it's because most people take money for granted. They don't really reflect on, why does the dollar have any value? And if you go down that rabbit hole and you start thinking about it, then Bitcoin makes a lot more sense. And usually, people who go down that rabbit hole become very interested in gold. I mean, they did before Bitcoin. Now, if they go down that rabbit hole, they'll be interested in Bitcoin, because they'll compare these things and they'll say, well, money has value based on the attributes that make for a good money. What are those attributes? Divisibility, portability, fungibility, verifiability, but most importantly, scarcity. Money needs scarcity to be useful as money, because money is not just a medium of exchange, it's a form of savings as well. And that's the thing that's really been destroyed by modern governments, is people using money as savings. So you want to save in something that's hard to produce. So you don't. So for instance, sand is not as good money as gold, because if sand was money, you'd go to the beach, you get a bucket, you'd be rich. and so money itself would lose all its value because everyone would do that. So especially along that particular attribute, Bitcoin provides something we've never seen before, which is ultimate scarcity. We know there'll never be more than 21 million Bitcoin. So if you get some of that Bitcoin and adoption grows, you know the value of that Bitcoin is going to go up a lot over time. And that's what we've seen. That's exactly why, that's the explanation for why Bitcoin has a price level and why that price level has been steadily increasing for over a decade now, and why we now have $1 trillion asset which is being created out of thin air.
I imagine that you get a chance to talk to quite a few investors, and we do as well in our company. And part of educating investors is separating different information sources. So there's the technical aspect of Bitcoin. There's also a whole cultural movement that goes alongside it. How do you help investors kind of separate the signal from the noise when they're evaluating, I mean, a huge flood of information? If you wanted to go study Bitcoin for the rest of your life, you would never get to the end of the content. How do you help people find signal in that?
Yeah, so that's a great question because I think a lot of people get caught up with Bitcoin Twitter and don't really realize that the vast majority of Bitcoiners are not on Twitter and don't care about people's opinion on Twitter. I think the fundamental thing to get people to understand is to understand money, because this is a subject that's not taught in school. It's incredibly important because, like I said, money is the foundation for all trade and savings. So if you're working a job and you're producing savings over time, it really helps to understand what those savings are and why you want to keep those savings in something that won't lose value over time. And I think once you get people hooked on that idea, why does money have value? Why does the dollar have value? Are there better monies? What did money look like throughout history? Those are the kind of questions. If you can get someone interested in those, then I think it's pretty easy sell. And there are a lot of resources out there now to explain this. A lot of great books, a lot more content than when I started. When I got interested in Bitcoin in 2011, there really wasn't anything. And there wasn't an economic framework for understanding why Bitcoin had any value. It was just this cool, magic money, internet money that was used by some cypherpunks and some libertarians who liked it because a lot of them misunderstood it too. They thought it was like anonymous money for, being able to partake in illicit activities like selling and buying drugs. They quickly learned, however, that Bitcoin is really bad for criminal activities because every transaction is recorded on this public blockchain and stored there forever. And law enforcement agencies can go back to that blockchain and look at it and figure stuff out years later on. But yeah, there were no real resources back then, and this is one of the motivations for me writing my book and the article that preceded it was to try and provide that economic framework so people can look at Bitcoin and say, this isn't like any other asset that I understand. It's not like stocks. It's not like bonds. It's not like real estate. I understand those because those produce cash flow. Most people can understand assets that produce cash flow because that sort of fits nicely with their mental model for how to value things. You just put a
Mhm.
multiplier on the cash flow, and that's basically the valuation. Bitcoin is not like that. And so I think getting people interested in like why it's different and why it has value is a really great starting point.
It's part of, I come from the traditional real estate world where cash flow is king, right? That's what you're building, a long-term asset portfolio that hopefully cash flows. And that was, I think, part of the reason why I personally got into mining, and many new entrants to Bitcoin are interested in mining, is because it's a familiar model, right? It's a physical asset that throws off cash flows. The only difference being your cash flows are denominated in Bitcoin. But do you think that getting into something like mining is an easy way in, or are there better ways for people to get into this? Should they be trying to take Bitcoin for their goods and services? Should they be thinking about this as a portfolio allocation? I mean, how do you get the next wave of Bitcoiners onboarded?
Yeah, so don't take this the wrong way, but I think I think mining is not a good way to get into Bitcoin, and I'll explain why. The Bitcoin mining market is the most competitive, most cutthroat, difficult market to survive in. You have to be an excellent operator to survive in that market. And I believe this back when I didn't know about Bitcoin and I was just interested in gold as an asset. I would tell people, look, if you're interested in gold, you're bullish on gold, buy gold. Don't buy miners, because when you buy a miner, you're not getting direct exposure to the commodity. You're getting management risk, you're getting geopolitical risk, you're getting execution risk, you're getting all these other things which aren't direct bets on the commodity itself. If you want and you believe in Bitcoin, buy Bitcoin. Getting Bitcoin through mining, you have to be thinking about it nonstop to be successful. It is something that some of the best operators on earth are thinking about nonstop. It's kind of like, going to a poker table as someone who's an amateur and everyone else at the table is a shark. You will get cut to pieces in the Bitcoin mining market because it is ultra competitive. In terms of portfolio allocation, you know, one piece of advice I got early on, which I think is a really great piece of advice, is buy Bitcoin, then try to understand it. Don't try and
Mm,
understand it, then buy it. And you can buy a really small amount. I think for most people, it makes complete sense to put 1% of their portfolio into Bitcoin just as a starter, because most people's portfolio will move by 1% a day. If you own stocks and bonds, stocks go up and down, bonds go up and down. And if you looked at your portfolio, its value would fluctuate by 1% a day. So you're not going to notice if you put 1% of your portfolio in Bitcoin. Over time, it's going to grow. And many people who've invested in Bitcoin have seen it grow from 1% to 5% to 10 or 20%. I actually know a bunch of people who have more than 50% of their portfolio in Bitcoin, which is, kind of crazy and a little, you could say, from a traditional financial advisor perspective, a little irresponsible. But, when you have the best performing asset in history, yeah, I can understand why people have so much of their savings in Bitcoin. But I think the way to start is get some exposure to Bitcoin, get some comfort with owning it, and you can get comfort by buying a small enough percentage. This is another thing that comes up a lot with me, speaking with investors, is like, I don't know if it's the right time. Maybe I'm buying in too late. And it's also really volatile. That bothers a lot of investors. And I say the solution to all these problems is position sizing. Just size the position to the point where those things are no longer a worry for you. Some people that's 10%, some people it's 1%, but you can find a position size that makes sense for you. The only position size I think doesn't make any sense is 0%. Because Bitcoin has benefits outside of the fact that it's a really well performing asset. It has benefits for diversification as well. And one of the things I talked about a lot with folks when I was just interested in gold was gold has benefit in your portfolio just for diversification purposes. You can get the same performance from your portfolio with lower volatility by adding in gold. Because the only free lunch in investing is diversification. Having assets in your portfolio which perform very differently under different circumstances, that gives you real protection. So when stocks are doing poorly, gold might do well. Or when bonds are doing really well, gold might not be doing so well. But having them all in there together gives you the same level of returns but lower volatility. And that matters for a lot of people because it's really hard to stomach. For a lot of people, it's really hard to stomach seeing their portfolio drop by 30 or 40%. And that's one of the
mm,
lessons from the great financial crisis, I think, is that people can't handle the stress and they tend to puke up their assets right at the bottom because they see them drop a lot, and they think, I just got to get out. It's good to have a portfolio designed in a way that it's going to survive through any particular circumstance, and Bitcoin will definitely
you,
help with that.
you talked about the most unsafe position being 0% allocation, right? And I want to play devil's advocate just for a second because someone like Michael Saylor, for instance, would say you should never sell the winner to buy the losers, right? So someone like me, I'm fully invested. It's silly to even try to convince me to put my money somewhere else at this point other than Bitcoin or Bitcoin related investments. What would you say to that person who's like me, who's like, well, I get it. I get it and I'm all in. How would you respond to someone who's got that attitude?
I think that's fine if you have the risk tolerance for it. This is a know thyself type question. Do you
Mm,
know yourself? Do you know if you are able to handle an 80% drawdown? If you've gone through them and you could handle it, then I say more power to you, because the people who have been able to hold Bitcoin over the long term are the ones who've seen just gigantic returns. If you've been able to hold through two or three 80% drawdowns, then you're doing really, really well. But not many people have the fortitude to do that. So the question I would ask to any investor who is all in on Bitcoin is, do you know what it feels like to see your net worth drop from, let's say you got super excited and your net worth got up to like $500,000, and then you went through an 80% drawdown and dropped down to, I don't know, 80,000 or 90,000. How would you feel? Could you hold the position? And I think a lot of people would say, yeah, I could handle that. But you don't know until it happens to you. Because the thing is, a lot of people will say, well, if it dropped that low, I'm still bullish on Bitcoin, I would just buy more. But the fact that the price dropped that much means that there's a general sentiment out there that Bitcoin is doomed. It doesn't drop, 80%, and then everyone's like, oh, it's ready to come back. You have to kind of put yourself in the feeling and the mindset of the bottom of the market when people think it's going much lower than this. Like in the last bear market when Bitcoin crashed down to 16,000, there was no obvious sign that it was going to bounce off 16,000, right? People at 16,000 were worried maybe it's going to go down to 4,000, or maybe this is dead, completely dead. And the media will amplify that feeling, and people like Peter Schiff and Nouriel Rubini will be out there on every news program saying, I told you so. And it's really hard in a situation like that when everyone around you is laughing at you and telling you like you're a fool, to hold on. Um, so if you know yourself and you can withstand that kind of pain, then go for it. Do whatever you need to do, be it 50% or 100%, go all in. The last comment I'll make is it should be based on your age. Your risk tolerance is really strongly tied to your age. If you're in your 60s or 70s, I would caution against going all in on Bitcoin, because you're getting close to retirement and you need to start planning for what your spending needs are going to be. If I was in my 20s, I'll just tell you personally, I would be in 100% Bitcoin. I would not own anything else, and I would have the runway. If I was wrong, I would have the runway to make up for the losses if I was wrong.
I totally agree with you. And the only reason why I'm okay with having the allocation that I do personally is because I have been through a couple of those cycles, and it's just noise at this point, right? I've been through enough bear markets to know that that's where your conviction is built, and that's when you get to figure out how deep your learning goes, right?
Yeah.
You get to test your conviction, figure out, well, how much do I really believe in this stuff when it's going down, like you said, 80% over a very short period of time. And it's only in those periods where you have some exposure, you have that price go down and your portfolio decreases in value, that you have an opportunity to learn and be tested. So that sentiment that you expressed earlier, just get some and then learn about it. If you do truly just get some, you will be forced to learn about it when that number goes way down or way up very quickly. That will be the catalyst for you getting deeper in. And then from there, if you want to keep learning via the technical aspect through getting into mining or looking deeper into the software or taking Bitcoin payments, there's all sorts of avenues for you to get more deeply involved than just having a 1% allocation. And I view that personally as, the catalyst for most of my growth in the space was finding these other avenues that you could get in to help you have a more well-rounded vision of this technology that we're all getting to learn about in real time as it spreads across the globe.
Yeah, absolutely. One observation I'll give you, Bo, is that I feel like people who become owners of Bitcoin for the first time during a bear market tend to be much stronger holders than people who come into Bitcoin during a bull market. Uh, and that's the toughest thing about this is it's so hard to convince people to get interested in Bitcoin and to get some savings in Bitcoin during bear markets. Unfortunately, ironically, it's usually the bull market that people come flooding in, and people will, as a Bitcoiner, probably your friends and family know that you're a Bitcoiner, and that's probably when you start getting unsolicited contacts from people saying hey Bo, can you tell me more about Bitcoin? And it's a little bit painful because it's like, oh, they're coming. This is probably a sign that we're getting close to the top of the bull market. It's painful because there are many people I've tried to convince during bear markets in the past, like, hey, you should look into this. You should get interested in Bitcoin now because it's the greatest opportunity is ahead. And those people, because they've suffered through the pain of a bear market, seem to be much stronger holders. The people who come in at the top of the bull market are often just speculators, and they'll get washed out, and Bitcoin will drop, and they'll sell their entire position, and a lot of them will become embittered. Unfortunately, they'll think this thing is terrible, it's too volatile. They won't stick around and see that the next cycle they would have been made whole and make even greater returns if they just stuck around for a while.
What would you say for people that are getting into this now? How would you coach people to make better investment decisions? They're getting into a brand new asset class. There's a lot to learn. It's highly volatile. How would you coach people to make good investment decisions going forward?
I think I'd just start with position sizing. Get yourself a position that you feel comfortable with, and then start learning about it. You'll naturally want to learn about it once you own it. And I think the other direction of going out and reading 10 books and figuring everything out before you decide to get any exposure is the wrong way, because Bitcoin is a very deep rabbit hole, and I defy anyone to say that they fully understand Bitcoin. You could spend many, many years trying to understand the economics, the game theory, the computer science, the politics of Bitcoin. There's just so many different aspects to it to understand. So I think it's better to start off with an exposure, and then go from there.
Going back to the title of the conference that we're coming to speak at, you've had some comments before in which you paint a picture where Bitcoin might not necessarily be for everyone in the way that people think about it, that not everybody's going to use it to buy a coffee in their daily routine. Can you talk about why Bitcoin may not be for everyone?
So Bitcoin is a system that's decentralized, and one of the things that helps it be decentralized is that there's a limited number of transactions that can be sent on the network at any period of time, and that just means that everyone has the capacity to verify all the transactions on the network, and this is kind of set in stone. And if you look at the history of Bitcoin, there was this thing called the block size wars, where there was a group of very powerful companies and individuals who tried to increase the size of the blocks and increase the number of transactions on Bitcoin. And thankfully, they failed, because if they had succeeded, then what they would have shown is Bitcoin is easily changeable. And if it's easily changeable, then you can't trust its fundamental value, which is the limited supply. Eventually, companies would come along and say, well, we don't like 21 million Bitcoins. Maybe we need to add in an inflation schedule. We're going to make this a bit more Keynesian. And then what you have is a central banking system. It's just slightly different, right? Instead of the board of governors of the Federal Reserve, you have the Bitcoin core developers, and they tweak it to make the inflation whatever they think is appropriate. So Bitcoin is immutable, and the fact that it's immutable means that it's really difficult to change these fundamental parameters of the system. And one of these parameters basically makes it very difficult to have more than tens of millions of UTXOs. These are the kind of fundamental building blocks of wallets, Bitcoin wallets. So it will just not be economic for most people on Earth to own a Bitcoin on chain. That's a controversial proposition, because a lot of people want Bitcoin to be something that everyone on Earth can, be sovereign with their savings and own their Bitcoin on a hardware wallet and control it that way. That's just not going to be possible. So when I made these comments, I was being, somewhat controversial and saying Bitcoin is not for everyone. But then I also said Bitcoin is for everyone, because what it does provide is a new monetary system which cannot be inflated and which cannot be censored, and where value can be transported as easily as an email. That provides a new foundation for the global economy, and having that new foundation will benefit everyone. So Bitcoin is for everyone, because we will see the fruits of that new financial system, which is just increased prosperity and peace for everyone on Earth.
Do you think that we're still early?
Oh, absolutely. Yeah. I mean, global adoption of Bitcoin is in the small single digits. Maybe 1 to 3% of the global population has their savings in Bitcoin. So it's still very, very early. I know this metaphor is used a lot, but it's kind of like the internet in 93 or 94, where people are like, what do we even use this for? This is, before smartphones, before Google, before um, Facebook, before anything that we kind of understand the internet to be today. It was when web pages were static and you couldn't really do anything. You couldn't buy anything online. You couldn't put your credit card in. Um, so I think we're at a stage where people don't even understand how Bitcoin is going to transform the financial system. Just in the same way, if you went to speak with someone in the early 2000s and said, what will the internet be? How is it going to change the world? Most people wouldn't have a clue how it was going to change the world. So we are super super early in terms of adoption, um, and I think we have still probably several decades before Bitcoin becomes established as a global reserve currency in the way that the US dollar is today.
I find that the Bitcoin space is full of paradoxes in the sense that you can still be early when 93% of the supply is already circulating. We've only got, a small percentage left to go. And there's so much room to run. We're already the 10th largest asset in the world. Millions or maybe hundreds of millions of people own it, but there's just a very small fraction of people walking around who truly understand it. And I was one of those. I was exposed to it and owned it as early as 2015, but feel like it wasn't until 2021 that I came around and really understood what this was. And so there's still a long way to go. Even if people are allocating capital to this, there's still a lot of intellectual understanding to be developed in people. And it just hasn't entered mass consciousness in the way that many things that we take for granted today have.
Yeah, I have this saying that information travels at the speed of light, but understanding does not. And I think it just takes people time to one get interested and or be awakened because of external circumstances. Like you live in a country like Argentina, it may be forced on you to try and understand this, to understand money and like why is it your savings are you know being why is savings melting away quickly. People in certain places are forced to understand this stuff, but for most other people it takes a number of exposures. It takes a number of people around them saying, hey, this is important. Why don't you check it out? And even then, it takes time to understand. So the fact that we have all this information and everyone has access to it now through the internet doesn't mean that the understanding will be there instantaneously. It's going to take a long time for everyone to sort of catch up. But the cool thing is, we have a generation of people now in the early 20s who are coming into the workforce who've only really known a world with Bitcoin in it. And for them, Bitcoin is basically a permanent institution of the world in the way that for us, the internet's a permanent institution. We assume it's going to be here forever. Kids growing up today assume Bitcoin is going to be here forever. So they're going to take it much more seriously and they're going to recognize this is a way that, I can save and send value that older generations may not ever get to.
How do you personally view your own journey as you've gone from maybe thinking of Bitcoin as an investment? How has Bitcoin as a savings vehicle changed your opinion on investments, savings, money? It's a big cognitive shift to go from I need to invest to get over the hurdle rate or beat inflation or whatever it may be to I found something that I can truly just save in. Can you talk about that mental process?
Yeah, one of the things I find most fascinating is how Bitcoin causes a personal transformation. It's not just like we talked about the benefits to society, but the personal transformation I see in people when they recognize that, hey, Bitcoin is this new asset which has ultimate scarcity. So if I start accumulating it and adoption grows, it's going to grow a lot in value. And one of the things that I've observed in a lot of people is that they become much more frugal and they're like, this thing grows in value so quickly. I need to get as much as quickly as possible because the size of the number of bitcoins, the size of your stack is really dominated by the number of bitcoins you get early on. So for anyone, who, if you're just dollar cost averaging into Bitcoin and you started in say 2014, the vast majority of the Bitcoins that you own will come from 2014 because you just happen to buy them much more cheaply. And once that light goes off in people's head, they think, I need to accumulate as much of this as quickly as possible. And so they stop spending as much and thinking, well, I don't need to buy that, or I can defer the purchase of this car for a little while. I can use my old car for a bit longer, because I want to save more. And I've seen this in so many people that I know that this isn't just like a coincidence. I think there is this aspect of Bitcoin transforming people individually and personally in the way they view the world. They become much more future oriented. Like, where do I want to be 10 years from now? How do I get there? What can I defer now that I can increase my pool of savings now to reach my goals in the future? And I think that's really cool. One other thing I've observed about investing in Bitcoin is, and I've had two experiences in my life now which have been life changing and sort of like being hit by lightning. The first one was being an early employee at Google, uh, and then later on discovering Bitcoin and keeping some of my savings in Bitcoin. One of the things I learned was that if you have conviction in something and patience, that is how you grow your wealth. All of the wealthiest people on earth, the twin secrets to their wealth was patience and conviction. That holding an asset over a very long period of time and holding a concentrated position in that asset is how you become wealthy. Look at all the wealthiest people on earth. Typically, it's shares in a company that they founded, and they have a lot of conviction in the company that they built, and so they're able to hold a very large position of percent of their net worth, say 90% of their net worth, over like 20 years, and that's how they become the wealthiest people on earth. Jeff Bezos, Bill Gates, Larry Page, and Sergey Brin, all through holding a concentrated position in one asset for a very, very long time. So that's another observation I've made through my investing career is, diversification is great, but if you want to grow your wealth, you really do need a concentrated position. You need the patience and the fortitude to hold it for a very long time.
What a beautiful way to get us close to the end of our conversation, because I think we've danced around a lot on position sizing and concentrating your risk and diversification, and these are things that people come into the space not having a great understanding of how they should apply it to Bitcoin. So I really love that you rounded us off with that. Coming up on the end of the hour, I wanted to open it up for you to talk about anything that you're working on, any projects, any kind of special events other than the one that I'll see you at next week, that you'd like to highlight that we can point people to so that they're keeping up with what you're doing in the space.
Yeah, so I work at a company called Swan, which I absolutely love. It's a company which makes it easy for people to get access to Bitcoin and to buy Bitcoin and to save in Bitcoin and to set up a savings plan. Because I think another thing that people sort of stumble on is like, how much Bitcoin should I buy? And they think of it as like this one time large purchase. Whereas a better way of thinking about it is like, I should be saving in Bitcoin. This is a great form of savings. So why don't I just sock away a percentage of my salary every month? And Swan makes it really easy to do that. So I'm really excited to be at Swan. We're building a whole bunch of really cool products. One of the ones I'm really excited about is a self custody solution, a multi sig solution. You hold two keys out of three keys, and Swan holds one key. And so Swan makes it a little bit easier to do multi-sig. And multi-sig is a way of owning your own Bitcoin in a way that's super secure and much less prone to being hacked, so that your savings is secure over time.
Beautiful. Vijay, where can people find you on the internet, whether it be Twitter, YouTube? What kind of accounts would you like people to reach out to you on?
Twitter is probably the best place. I talk about Bitcoin a lot on Twitter, and that's where I publish things that I've written. It's real underscore VJ, so RealVijay. If you want to find me on Twitter, and I have open DMs, and I always love responding to people who are interested in Bitcoin. So you can reach me there and shoot me a message.
Fantastic. Well, BJ, thank you for being so generous with your time with us today. I was really excited to get a chance to talk to you, especially ahead of a chance that we have to talk to each other next week. And just want to say thank you for everything that you've done in educating people and getting them onto Bitcoin. I think this is truly one of the best ways that you can use your energy to serve all of humanity. I'm sure you would agree, otherwise, you wouldn't have put your time, effort, and energy into developing the space and joining such a great company. So, just want to say thank you for everything you've done and thank you for sharing your time with us.
Thanks, Beau. Appreciate it.
All right, everybody. Thanks for tuning in. This was an episode with Vijay Boyapati of the Reinventing Energy and Money podcast. Have a great rest of your day.